Welcome to The Explainer. So today we're looking at something that absolutely lit up the retail world, Aritzia's Q1 2027 financial press release. I know. Financial reports can often be incredibly dense and super data heavy, but hidden inside this specific document, it's literally an absolute masterclass in explosive retail growth. I'm so thrilled to guide you through this today, basically breaking down exactly how a fashion brand manages to completely defy the odds in what's honestly a pretty challenging economic landscape right now. Okay, let's dive into this. Before we hit all that raw data, we've got to ground ourselves in what actually drives these massive numbers in the first place, right? The product. What you're seeing here is Aritzia's core proposition, everyday luxury. Their phenomenal spring and summer collections resonated so deeply with consumers this quarter. It's exactly this product momentum, supported by what management calls a healthy inventory position, that really set the stage for everything we're about to unpack. Now, to make sense of all this dense data, we're going to follow a clear roadmap today. First up, a record-breaking first quarter. Second, the United States takeover. Third, digital and retail synergy. Fourth, expanding the profit margins. And finally, number 5, the fiscal 2027 outlook. All right, Section 1, a record-breaking first quarter. We're going with a bottom-line upfront strategy here, mostly because the numbers are truly staggering, and I want to hit you immediately with the most impactful data points from the quarter. Ready? Boom. $951 million. That is Artizia's Q1 net revenue. To put that into perspective for a second, that represents a massive 43.4% increase year over year. Actually, on a constant currency basis, it's an even higher 45.8% increase. In a retail environment where, let's be honest, many brands are struggling just to stay flat, adding over 40% to your top line in a single year, that's almost unheard of. But wait, it actually gets better. Take a look at this number. 35.1%. This is their comparable sales growth. Now, why does this matter so much? Because it proves this demand isn't just some illusion created by opening up a bunch of new stores. This means their established channels, the physical boutiques and digital storefronts that were already open last year, saw massive compounding momentum from both returning and brand new customers alike. And here's the absolute punchline of this rapid-fire sequence: 176.6%. That is the explosive increase in Aritzia's net income, just rocketing up to $117.3 million. They aren't just selling more clothes, they're actually keeping vastly more money from those sales. This is, hands down, the very definition of scaling a business efficiently. And, this quote perfectly captures the why behind all those crazy numbers. CEO Jennifer Wong noted, "Our momentum was broad-based across the business, spanning all geographies, channels, and categories." So the really crucial takeaway here is that management views this not as a one-off fluke or just some lucky single item going viral, but as a systemic company-wide surge. Everything is literally firing on all cylinders. Moving right along, Section 2, the United States takeover. Now, what's really interesting about this is how they generated that momentum. Aritzia pulled their first strategic lever: aggressive geographic expansion. And what's truly fascinating about this geographic breakdown is just how drastically the identity of this brand has completely shifted. I mean, Aritzia was founded in Vancouver, Canada, way back in 1984. But looking at this breakdown, the Canadian brand is now overwhelmingly a US-driven business. The United States is making up 67.1% of their total net revenue. And you know what? That gap is only widening. When we compare the growth rates, you can see the U.S. market is rapidly accelerating, growing at 54.5% to generate $638.1 million this quarter alone. Canada is still growing at a very healthy 25%, bringing in almost $313 million. But the sheer velocity of the American expansion, that's the true engine powering this whole company right now. This U.S. dominance definitely isn't accidental. It's fueled by a highly deliberate real estate strategy. Over the last 12 months alone, Aritzia opened 14 new boutiques and repositioned 5 existing ones, bringing their total boutique count at the end of Q1 2027 to 143. They're very carefully planting flags in premium U.S. real estate, and, well, it is paying off handsomely. Which brings us to Section 3, digital and retail synergy. So we've seen their physical footprint expanding, but now we really need to explore how their brick-and-mortar stores and their e-commerce platforms are working together, honestly, perfectly. Notice the split in these channels. Retail still forms the incredibly solid foundation of their business, bringing in $666.3 million, which is just over 70% of their total revenue. But look at that digital growth line. Digital revenue is absolutely soaring, jumping 55.5% to reach nearly $285 million. It's super clear they aren't cannibalizing their physical stores. Both of these channels are feeding off each other's success.
So what exactly is driving this incredible digital surge? Well, the sources point to three main drivers. First up, that robust product demand we talked about earlier. Second, the highly successful launch of their new mobile app, which basically made mobile shopping completely frictionless. And third, strategic digital marketing investments that successfully drove high-converting traffic straight to their brand. They built the digital infrastructure, and the customers absolutely showed up in droves.
Okay, Section 4, expanding the profit margins. As any focused learner of business knows, top-line revenue is fantastic, but it really only matters if the company can actually keep the cash, right? This contrast represents what we call the holy grail of retail. On the left, their gross profit margin expanded from 47.2% to 50.3%, meaning they are making more profit on every single item sold, thanks to better markups, fewer markdowns, and leverage on store occupancy costs. At the exact same time, on the right, their selling, general, and administrative expenses dropped from 33.5% down to 32% of revenue, so they're making more money per shirt and spending a smaller percentage of their cash to run the business. Win-win. But before we reveal the final results of all of that efficiency, let's quickly define a term you'll see a lot in this report: Adjusted EBITDA. It stands for earnings before interest, taxes, depreciation, and amortization. Basically, it's a measure of a company's overall financial performance, adjusting for extraordinary or non-cash items. It just shows us their pure, core operational profitability without all the extra noise. And all of that efficiency builds up to this phenomenal figure, $191.6 million in adjusted EBITDA. Guys, that is an 80.5% increase compared to the same time last year. Plus, it expands their margin by 410 basis points to a first-quarter record of 20.1%. When you combine explosive top-line growth with shrinking operational costs, this massive profit spike is exactly what you get. Which brings us to our final segment, Section 5, the fiscal 2027 outlook. Based on this incredible Q1 momentum, we really need to look at Aritzia's roadmap for the rest of the year. So, are they tapping the brakes to consolidate, or are they stepping on the gas? Oh, they are absolutely stepping on the gas. Management is officially upgrading their revenue outlook. They're now targeting full-year net revenue between $4.55 and $4.75 billion, which represents 23 to 28% growth from fiscal 2026. They also expect their gross profit margin to increase by 175 to 225 basis points for the year, backed by roughly $250 million in capital expenditures. They're forecasting sustained massive growth. And of that massive $250 million capital expenditure, it's incredibly clear where their focus lies. They're targeting 11 to 12 new boutiques this year, and get this, they're targeted exclusively in the United States. They see the undeniable momentum in the American market right now, and they're deploying their capital directly into that engine to capture even more market share.
So, we leave you with this provocative question to ponder. With the U.S. now firmly established as their primary growth engine, just how high is Aritzia's ceiling? I mean, they've proven they have the product, the digital infrastructure, and the operational efficiency to scale rapidly and profitably. Thank you so much for joining me on this explainer today. Definitely keep your eyes on Aritzia's future earnings, because if this quarter is any indication, we are watching a brand actively rewriting the retail playbook in real time. See you next time.